Hey guys, welcome back to the YouTube. My name is Anthony.
And yeah, I'm Tod Barton. So thanks for inviting me. It's been a while since I've actually been on video, and
It has. It has. You've been taking a little hiatus. You want to just keep yourself away from the internet? What's going on?
well, you guys are doing a great job of sharing some of the challenges of real estate and sharing some of the houses that are out there for sale. And so I have been able to step back. But yeah, I think we're going to talk a little bit about today about maybe some things the public is seeing that might be scary. So glad to be back on. Thanks for having me on.
Yes. So getting into that, this past week, I'm sure a lot of people in Nevada, especially Las Vegas, have heard and seen the news stories that have been coming out. They're talking about the mortgage defaults. So kind of just getting into a little bit personally for us.
Wait, what's a mortgage default? What do you mean by that?
So mortgage default, that's when you haven't paid a couple of your mortgage payments, and then the bank sends you a notice saying, "Hey, you're in default. We're going to need you to start, paying your payments.
Okay,
Otherwise, we're
so
going to initiate the foreclosure process."
all right, so it's the mortgage default would be people who are falling behind on their payments.
Mm-hmm.
Yeah. Okay.
So last week, a couple different news outlets, and they actually had a couple news stories about it. They come out with this big headline: Nevada is one of the top. Nevada is the top mortgage defaults going into the new. How would you word it?
Well, I think that they just said that there's a lot of Americans who are now going into default on their mortgage, and then of course later in the article they list out that Nevada happens to be the number one state with the highest percentage of default.
Right.
And I think that's the clickbait, that's the scare tactic, that's all of those things that news outlets use, and or people trying to get clicks on their YouTubes or click on their TikToks or whatever. And I get it. I get that's how they get their clicks, but they don't really share the whole story. That pisses me off.
Mm-hmm. So yeah, from the other side of it, when we see this news story, obviously we have a couple clients. I've had people reach out to me, sending me the news story, asking me, is the world falling down? Are we going to go back to '08, back to that time? And it's hilarious because we have some numbers we're going to get into, but when you really get down into it, this title really is clickbait. Because can you kind of give me a little bit of the numbers about it? We'll kind of tell you, what's happening here.
Yeah. So the percentage that they use, it sounds like a huge number. I mean, I think it's somewhere around like 34 or
Mm-hmm.
36% or something like that.
Mm-hmm.
I actually looked it up. Yeah, 30. So the number they're using is around 37%. So we've had a 37% increase in mortgage defaults in Nevada.
Mm-hmm.
Sounds like a huge number. That's almost half of all the mortgages in Nevada, right?
Mm-hmm.
The reality is that it's a really really small number. Like for example, currently in southern Nevada, Clark County, maybe this would include Nye County, this would include Pahrump, um, excuse me, this would include Nye County with Pahrump in it and Amargosa Valley, and it would also include Mesquite, which is part of Clark County.
Mm-hmm.
There's approximately, and the number changes so quickly you can't really get an exact number, but there's somewhere around 175,000 homes, single family. Um, this includes condos. This includes townhouses. So this is single family residents, not necessarily all detached. Some of them are attached because of the condo townhouse. So there's around 175,000 um, units,
Mm-hmm.
and there's a 34% increase in the number of defaults that were filed. Well, what does that mean? Like how many defaults? So, by the way, it's called a notice of default, or a default and an election to sell is what it's actually called in a state. And so the question really is, out of those 775,000, by the way, 777 was the actual number that I researched a couple of days ago. How many of those homes had an NOD filed against them? That's the real question. What do you think the number is? Just take a wild guess. Let's go to June.
June, uh, is about 100-ish.
little bigger, 147 homes.
Okay.
So, by the way, that's less than 1% of all of the available homes, right?
Mm-hmm.
Now, I also have to be clear
It's
about
less
this.
than a fraction of a percent.
Yeah, well, I mean,
it's
it's
down there.
0.008, right?
Right.
So, but let me be clear about that. Out of the 175,000 homes, plus 175,777, whatever the number is, out of those, not all of those homes have mortgages on them. Okay,
Mm-hmm.
so for all the people coming at me already, yes, I understand that all homes don't have mortgages against them, and there, there's statistics out there. By the way, 80% of statistics are, maybe even 99% of statistics are made up.
Right.
But the reality is, it's a really small number based on 174 NOD filings in the month of June, which is a super small number. That's in the entire state of Nevada. That's not just Clark County, right?
Mm-hmm.
The number of homes I'm talking about is just southern, but that number is statewide, 147. So how many, just moving on, how many do you think there were in July?
I'd probably have to keep it around.
It was a huge increase.
It was an increase?
Oh, it's huge.
Okay.
I mean, if I'm trying to get someone to click on my stuff, it was a big number.
Let's say 200 then.
Yeah, it was 162.
Okay.
Yeah, so, I mean, it was, what is that, 13 more.
Right.
Yeah,
so that's,
for the month of
July. That's a huge increase. Right.
Yeah. So, that's going to be a big number percentage-wise if you
mm-hmm.
are trying to get someone to click on. But the reality is look, it's a very, very small percentage of the number of homes out there that are in default. There's always going to be homes in default. That's just, it's the nature of the beast. There's always somebody who's, they've had a medical issue. They've had, they've gotten into a car accident. For some reason they can't pay their payments for a while.
Right.
There's always something, a death in the family. There's, unemployment is obviously an issue right now, right? So it's pretty high.
I mean, whatever it may be, life happens,
Yeah, life happens, exactly. So those aren't very big numbers, but the real challenge is, here's how the NOD works. The mortgage holder files an official notice called a notice of default. It's recorded at the county recorder's office. Usually, not always, but usually that means that the person that owns the home or owns the mortgage has missed 3 payments. So They'll wait till you miss 3. They'll try to help you get it resolved. They'll try to get it fixed. But once you've missed 3, they're probably going to file this notice of default. Mm-hmm. You have 35 days from the date on the notice of default, from when it's filed, to cure that. So you could go pay 1 month's payment. Then you wouldn't be 3 months behind anymore, and technically you've kind of cured that, right? Now it's more complicated than that, but for the ease of the video, that's, I think, important to say. Now the real question then is, what happens after an NOD? Do they foreclose on the 36th day and someone's living on the streets? No, that's not the case, mm-hmm. right? Then there has to be what's called a notice of sale, which means that, hey, you didn't cure the problem during the 35-day default period. Now we're filing for a notice of sale. Now the question becomes, well, how many houses, if there's 147 or 162 that got notice of defaults, how many of those actually don't get cured and actually go to a notice of sale? Go ahead. What's the number? How many of those 147 in June, how many of those do you think converted to a notice of sale?
Well, see, this is what's funny is I'm pretty sure that's that 30% that they're using, is it not? The going from the notice of default to actually going into the process.
Could be.
Yeah. So whatever 30% of 160 is, probably.
By the way, it's 58.
Okay. Right.
So 58 homes actually went to notice of sale.
Okay.
Now the cool part about notice of sale is you still have about 121 days mm-hmm. before they could actually foreclose.
Right.
Right. So I don't know if you want to add those together, but 3 months plus 35 days plus 120. I mean, it's a long, drawn out process.
Right.
It is a process. And so they have to get that process started. But the real question would be, how many of those 58 actually got foreclosed on? Unfortunately, there's not an easy way without actually going and looking at all 58 addresses and then going to see who the new owner is. I didn't do that much work. I'm sorry. I'm not that.
We won't hold
I'm
not.
I'm not that interested. All right.
Right.
But I think it's important to say that watch out for what the news says, because they're always going to use the big number. I mean, I did all this research and actually shared this with a bunch of agents in our office. And then, at the end of the whole thing, the percentage of NODs filed that actually turn into defaults, right, is that 37%.
Mm-hmm.
And that I literally said, you're going to start seeing this 37% number on TikTok videos and shorts and Facebook videos. Right. I don't know what those are called. You're going to start seeing this big 37% number, which sounds alarming. But the reality is that's only 418 homes in the state for the entire year, 8 months. Now, how many of those 418 actually went to foreclosure? I don't have that number.
Tough to find out, right?
Yeah. I mean, we can go see how many foreclosures there were, but I didn't dig that deep. But so your question was, is the world falling?
Right.
Absolutely not. Right. Now, what I will say, what's important for homeowners to understand is there aren't very many homes out there. I would say that it's somewhere between the 80 and 90% range of homes that have equity in them. Right. So if there is some stress, if there is some distress, if there is some challenge with life, because as you pointed out, life happens.
Always.
Right? You have equity. Like, use that equity to your advantage. There's lots of things you can do. You could go get a second mortgage against your home, use some of that equity to get you through this rough patch, right? You could sell the home, get your equity out, get you into a rental for a period of time or into another property, whatever that looks like. Like, a lot of the homes in the valley, in all of Nevada, have equity. So use it to your advantage. It's accessible. You can get to it. People don't know that. People think you only get that money when you sell.
Right.
And that's not the case. So, I mean, we'd be happy to help people kind of figure out what that looks like. We'd have to know what their situation is like. But it's not a one shoe fits all situation, right? We'd really have to understand what their situation was and then figure out how we could help them. But equity is one of the most powerful things in the world because it's real money and you can really get to it.
And I think nowadays, kind of like what you were saying, a lot of people don't understand that they can use that equity. So for anybody out there, come into the office, we can sit down and kind of take a look at your situation and, what would be best for you. But kind of going along with that, I've had a bunch of people try to tell me, we're in a housing bubble. We're going to go back to the 08, all that's going to happen again. But the difference, and you pointed it out, is equity, right? So you tell me around there wasn't the 80%, 90% of the homes who had equity in the home.
Well, interestingly, it was exactly the opposite.
Really?
The approximately the percentage of homes today that have equity in their homes, people that have equity in their homes, that percentage is just about exactly flipped. And back then it was that percentage, the larger percentage didn't have equity.
Really?
Right? And they had to, they couldn't sell. By the way, that's what created short sales, right? Short sale is going to a bank and saying, hey, I'm in a financial situation. I've had whatever that looks like, and I need to get rid of my property because I can't pay the payment anymore. And so we need to do a short sale. Right. So that's how that all started. I mean, the amount of homes with equity today is flipped from 07, 08, 09, 2010. Like, nobody had equity. Here's what happened back then, just real quick. I know y'all are getting bored, but I think it's important to understand that the government came out and said, hey, if you don't find a way to lend money to people to buy homes, the government will do it. So banks started to do all kinds of creative lending. One was the no money down, interest only, right? And it was if you could fog a mirror, you could qualify. Like, there was no qualifications basically. So everybody was buying homes with no money down. So they had no skin in the game. There was no interest. So at the end of 3 years, they owed what they bought it for. It's like having an apartment, right? You just pay in and they were just basically paying rent to themselves. And then when the market started to get a little bit shaky, people started to run and vacate homes, and that's what kind of caused the crisis. But the reality was, nowadays people have more than 20% equity in their home, And so they're not going to run away from that. Where when they didn't have any equity in their home because of the type of mortgage they had, there was no reason not to walk away. Like there's no reason to not walk away from an apartment. I don't own it.
Mm-hmm.
If it burns to the ground, it's the owner's problem, right?
Right.
I don't mean to be that mean about it, but
it's real though.
That's the reality, right?
Mm-hmm.
If I have 20% equity, then it makes total sense. I'm going to stay there and fight. I'm going to figure out a way to get that. So, yeah, that's really what happened in 07 to 08. There's a lot of equity out there right now. I can't see how. I'm not going to say it won't happen. All I'm going to say is I don't see it happening. Nationwide, we're more than $2 million behind demand, and supply and demand runs everything.
Mm-hmm.
So there's 2 million homes that need to be built based on people who already want to buy. Interest rates are always a conversation point, but I don't think they're really a factor. People will always say, well, I'm going to wait for the interest rate to come down. Well, okay, keep waiting.
Right.
What if it doesn't come down? You're going to be paying someone else's rent. You're going to be paying somebody else's 7% mortgage when you pay your rent. Because when they bought that house, they paid the current mortgage interest rate, and they're collecting that from you. So it's really no different. So, yeah, it's kind of crazy how people get tied up in different parts. It's going to crash. Or what about the interest rate? Or, you know what? Buy the house. Literally, buy the house. If you can qualify, buy the house. It's the only way you're going to build generational wealth without getting lucky. And, getting lucky is being an athlete that gets a big contract or, getting in a car accident, you get a big settlement. But the reality is, I mean, for people, building long-term wealth is done through real estate. Even some of the most, Warren Buffett, that's how he maintains his portfolio, is through real estate. It isn't by buying and selling businesses or whatever else he does. So yeah. Anyway, it's not crashing. It's not dying. We're going to be okay. Powell announced today that he feels like maybe there's a need to lower the rate. Now, of course, that's not the mortgage rate. That's the Fed rate. They're different. The mortgage rate does tend to follow the Fed rate over time, but
after a while, right?
Yeah, it won't be immediate.
Like last year, we saw 2 or 3 cuts, and it didn't affect it too much, honestly.
No, not hardly at all, actually. But there's a lot of downward pressure right now on the Fed and on interest rates, and I think you're gonna see some positive outcome for potential homeowners.
Okay. So, I've had a couple people talk, these news stories obviously trying to shed, kind of some bad light on Nevada nationwide. I've had some people who were thinking about moving here from Florida, and now they're kind of questioning it, because of this mortgage default story. So what can you kind of tell us, should people be scared about moving to Nevada, moving to Las Vegas?
Well, I think it's opposite of that. I mean, if there really is a default problem, then that just means there's going to be a lot of property available. I don't know if you understand the concept of supply versus demand, and that supply versus demand drives pricing. When there's a lot of supply and there's a little bit of demand, that drives pricing down, and when there's a lot of demand and a little supply, it drives prices up. So if the reality of this article, if it's really crashing, the reality is there'll be more inventory available, which would probably drive pricing down. Now, I will tell you right now, nationwide, not just in Nevada, but nationwide, and right here in Clark County, right here where we work on a day-to-day, we are seeing more inventory on the market, and that is causing homeowners to lower the price because some people have a need to sell. And some people are just trying to get as much money out of the market as they can.
Right.
So the people trying to get the most money possible, they're not lowering the price.
Right.
The people that have 2% and 3% interest rates, who will have to buy at a 6 or 7% interest rate, they're not lowering the price.
Right. They're fine, just sitting pat for a little bit.
Yeah, they're for sale, but they're not lowering the price. There are people that have a need to sell. That, again, life happens, right? They've had a baby. There's been a death in the family. There's been a divorce. There's, whatever the reason, they've got a job transfer. Their kids have all gone to college and they need to downsize because they live in a house that's, 4,000 square feet. And they don't need anything. They're just paying too much money in bills. And there's people who need to sell, right? And there's reasons behind it. There's motivation. So those people for sure are lowering the prices a little bit. But again, even those people typically have low interest rates, and they're not as motivated to lower it as much. So the thought process of, oh, I shouldn't go there because Nevada leads it. Look, we lead a lot of things, right? Nevada is one of the big up and coming states. We have room for growth. You go all over the East Coast, and there's not a lot of room to grow. There's not a lot of room to build. There's not a lot of room in Florida.
Right.
You know, in Vegas specifically, in northern Nevada, there's still plenty of government-owned property that can be released for us to build housing on, and it's how we can catch up on our deficiency of new homes that need to be built. So no, I don't think there's any reason not to come to Nevada. We got some great opportunity here with, you know, no state income tax. That's a good thing. I mean, if you're a business owner, you have inventory tax. You don't have that in the state of Nevada, right? So you can store as much stuff here as you want. You don't have to pay tax on it every year. So I think there's a lot of reasons to bring business here. It's a great place to live, weather-wise. You know, you're 20 minutes to Lake Mead. You can go water skiing, go to the lake. You're 3.5 hours from the ocean.
Right.
You can get there in 3 if you try. I've done it. You can go snow skiing 45 minutes away. I mean, everything that you could want to do, there's hiking, everything you could want to do is in Nevada and Vegas specifically. And so I don't see a problem with Nevada at all. It's a great place to live. Raised 3 kids here, and I'm working on 5 grandkids right now. So,
and I would say just recently, Las Vegas specifically is kind of turning into like a sports kind of mecca, right? I mean, we've already got all the entertainment on the Strip, but I mean, we're really starting to ramp it up with the Raiders, Knights. You know, we're talking about hopefully eventually getting NBA. We've already got, you know, the baseball getting built. So, it's a lot happening in Vegas here.
Yeah, I think that, you know, I grew up here, and so that was always kind of something that was missing, was professional sports. And we've always had, you know, AHL hockey and Thunder, and we've always had the Stars back in the day, which is the minor league baseball teams. And, you know, we've always had the smaller teams. But yeah, now with professional sports coming, and it's really, you know, it's becoming a great city to be in, because to go to a professional game, you don't have to travel hours to get there, right? I mean, it's, you know, literally I go to the Knights games. I'm a season ticket holder at the Knights. It takes us 15 minutes to get from our house to the game and 15 minutes to get home. It's great. You know, you can go from one side of Vegas to the other in 45 minutes if you're slow. It's a great place to live.
Right.
Yeah, in my opinion.
All right, well, wrapping it up here on the mortgage defaults, do you have any last points for anybody? Again, you know, still trying to read the news stories, still, you know, not taking our advice here.
Well, I think if you know, read the news stories, I think it's important to read them, but I think it's also important to kind of understand where they're getting their numbers from. Percentages are hard, right? I mean, if they're not presenting actual numbers, then my first thought is, okay, well, there's something they're not telling me.
Right.
And anytime they use a percentage, it's pretty easy to look. We could have 100% increase in defaults. We could have a 200% increase in defaults, right? And we'd be at we'd be around 1,000 defaults.
Right.
Right. That would be a 150% increase. That's pretty
That'd
scary.
Be a huge number.
But you know, 1,000 homes out of 17, and again, that 175,000 is just southern Nevada. That's not even northern. And the 418 of all of this year is all of Nevada. So, you know, you could triple that number, and it would be, wow, look, there's been a 200% increase, and oh my gosh, what are we gonna do?
Right.
Yeah, no, it's clickbait, and it's not a big
actually
deal.
Going along with that, the real number.
Tell them to reach out to a professional.
Yes.
The news is not a professional, right? Reach out to a professional.
Yeah, talk to somebody who's in the industry every day, seeing the places go on the markets, actually dealing with, you know, people who are having mortgage issues. And you know, you were talking about the numbers. To put some numbers on it, this would be one last point. When we were in the crisis 08, a rough number, it was about 1 in every 10 homes was in mortgage default, right?
100%. One in every 10.
And now, you know, right now with this new story, it's about 1 in every 2,500.
Yeah, 2,385, I think was the number.
Okay, so you got the correct numbers. No, I love it. Exactly what you were saying. You know, percentages can lie. If you got the real numbers, you're looking at 1 in 10 versus the 1 in, 2,300.
Yeah,
it's a very stark difference. The world is not falling down. I can promise that.
And it's a great time to buy homes. Because
it is. If you're a buyer, I mean, sellers are having to, you know, give out some incentives to get their place going.
Yeah, I would tell you that there's some great deals out there right now. They come across my inbox every day.
Mm-hmm.
And yeah, so yeah, I just say if you see a percentage that scares you, I don't care what industry it's in. I mean, if you see something in the car industry, I don't know, talk to a car salesman, right? I mean,
Right.
but
Do
I
your
would
research.
I just tell you that percentages are tough, and do the percentages lie? I don't know, but in this case, it's definitely not the story they're trying to tell.
Right. Don't take the clickbait title, for gospel.
Yeah,
Do your own research. Look at what's actually happening.
yeah, I agree.
All right, hey guys, thanks for watching. If you want any other topics, any other stuff about Vegas, we love going all around. If you want to see any houses, reach out. We're
To him,
guys here.
reach out to
Reach out
him.
to me.
Yeah,
If you probably could get him on some big deals, but
yeah, maybe.
either way.
No, I'm just kidding. Happy to help anybody. Yeah, I do kind of tend to dig into the technical side of it, and he does a great job selling them. So let's just keep that going.
There we go.
Thanks for
All
having
right.
me on.
Hey, thanks everybody. We'll see you next
guys.
time.